Hi, Randy Reichert, Skeena Resources President and CEO. Skeena Resources has the former producing Eskay Creek mine, was previously one of the highest grade producing underground small operation gold mines in the world. And we're redeveloping that into an open pit operation, just really starting on the development of that project right now.
So, welcome to London.
Thank you.
You're here for the show. And to do what? What are you hoping to achieve?
Well, we've just released our Definitive Feasibility Study. So now it's really about getting out there and talking about it and showing how we've made some improvements, made some changes, and really just giving a good eye to the project now.
Right, and you're relatively new to the team, right? And so what have you been brought on board to do?
Yeah, so really brought in to develop and build this project.
Right.
So
build out, and you're bringing on board people.
Bringing it in operation.
Fantastic. Yeah. But first of all, you got to get finance, right? So that's the big thing. So, and before we jump into that, let's talk about the numbers around the DFS. Sure. What do they tell us?
So we increased the NPV in the project to 2 billion Canadian NPV. A great 43-ish% IRR, 1.2 year after tax payback. So good numbers overall. $682 US all-in sustaining costs. So that's really, puts us at the lower end of that range.
Yeah.
And that's all driven by the grade of the deposit.
Right, so the margin is there, and that's the thing that people talk about these days, because obviously mining as gold gone up price, silver hopefully following suit, but sort of costs. So that margin has been squeezed in effect. So when you came on board, what were the things that you were focused on? What did you have to solve?
Well, there were a few things in the project that I saw that I guess I saw as a little bit more of a risk. One of the things was the flow sheet was complicated. I had a lot of regrind circuits, different flotation circuits in it. So aimed to simplify that. As well on the mining side, saw that they were using a mining method that wasn't as selective as I was used to, say, at like Fekola and some of the other operations in Africa. So look to switch that, knowing that we could probably bump the grade up a bit on that as well. And then just some of the other things in the project overall, making sure that it was buildable, and something if we did build it, that it was readily, something that could be operated well from the beginning.
Right. And obviously you mentioned it's a former producing mine, high grade is 45 grams per ton sort of level. There are advantages and disadvantages to kind of effectively restarting and getting into a former producing. Right. I mean, what are those?
Well, the big one, so along from the old operations, there's a number of existing permits. But it is a different operation. It's not a small underground operation producing 400 tons a day. We're actually going to process 8,800 tons a day. So that changed to open pit. So we'll do an environmental impact assessment. We're well into that now. And then looking to get really final permits for that kind of mid-25.
Right, okay, and is that the last remaining hurdle?
That's the big one, yeah.
Right, okay. And obviously these days that's extremely acceptable. So it's not a case of we start it's 0 and then suddenly 100. I mean, how far along that process are you?
We're going to put the application in for the EA in the next kind of 3 months.
Right.
So that's well along there. And then there's about a year review process on that.
Right, okay. And obviously you've got the money to be able to kind of deliver that.
Yeah, correct.
Okay.
And as well, using our existing permits, we can make some permit amendments and then do some other things like a joint application for an early works bulk sample permit. It allows us to get actually in and start the construction ahead of the final permits.
Right. Now, it's a big setup. I mean, some of the numbers you messed up, but the NPV is a big number, but the total number of gold equivalent ounces being produced is significant. First 5 years, particularly. So yeah, is that why do you want to build it? Why not give that to someone else down the mid-tier with the balance sheet to be able to kind of get over the confinements?
This is kind of the perfect starting point of a company when you really look at this and say, okay, you can be producing 450 to 500,000 gold equivalent ounces right straight out of the gate. Mm-hmm. It immediately puts you into that intermediate category. The margins are so high, it really is something that you can build a company upon, right? That was kind of the real desire for me when I looked around at, many deposits or projects around the world. This one really stood out as from the economics and really what it was capable of doing. And really, it was a project that wasn't that complicated to build.
Right.
And so it's attractive that way.
Right. But in terms of the money, kind of come back to the money conversation that we know what's happening out there in the marketplace. It's a kind of bifurcated market. Explorers are struggling. No one's interested. Advanced developers like yourself, like what I saw in Colorado Springs was the money does seem to be there as a question of the cost of that capital and the type of money that comes in. So what sort of conversations have you had?
Yeah, the conversations we're having are with kind of the alternative. So straight debt, we really can't take that on until after we receive final permits anyways. Some of the alternative guys like the streamers are offering money at more like 1 times NAV these days versus, if we do an equity raise right now, we're trading at about 0.2 times NAV. So that's where we're kind of focused on. There was a deal done last year, financing for G Mining in their Brazil project, something similar along those lines. One firm providing pretty well everything is what we're really focused on.
Right. But I know you can't move forward unless you've got the permit, right? And environmental. But how long do you think that process will take? Because the debt usually takes a while. And in these markets, you want certainty sooner rather than later.
Yeah, so it'll be really a combination of stream, equity, and debt. Right. And so we'd be looking at doing the equity all in part of the same package with the same group, and the stream kind of at the front end, and then the debt part more into mid-25. But we want to look at announcing that kind of in the first half of next year.
Right. Okay. So it's a kind of phased cash flow, and okay. With regards to some looking forwards, okay. So it's a quick payback. That's good. And you will be a producer, which in this environment is good too. And you've seen a lot of your peers, wannabe peers, of struggling around the kind of cash component because it's destroyed, well, the economics, shall we say. So for you guys, you're obviously quite pleased about where you've ended up. But when you're looking forward at this thing, there's kind of build phase to go through, which is how long? Some of that?
We expect to be in production kind of mid-2026.
Right. And then the ramp up is?
And the ramp up about 3-4 months. So,
Oh, really?
Yeah.
Wow. Okay. Should be really simple.
Yeah.
Okay. And obviously, you must have a view on what's happening out there in the marketplace. So you wouldn't be rushing into getting finance, right? So, give us a sense of what you think's happening out there.
Well, from a metals point of view, we think, gold, I expect to go higher. Silver, we're hearing lots out of, especially China, in industrial uses, especially for things like solar panels, and major uses there. So we expect both of those to be going up. But really, and if we start now entering a little bit of a recessionary environment, hopefully those inflationary costs that we've been seeing on projects kind of get more in line. We're certainly looking to tie into some of the bigger components very, very soon.
Right.
Get those done.
Got that funny balance fin to get inflation come down, but rates sticking where they are.
Yeah.
But again, your expectation is, well, who knows what the Fed's going to do. That's great going there. So if I'm an investor looking at this thing, say fairly valued right now, is it all?
We think we're incredibly undervalued. We've just put out the DFS that gives us a $2 billion NPV on it. We're trading at about 0.2 times NAV right now. We think really for a project of this quality, we should be in the 0.4, 0.5, 0.6 range. That's where we really expect to be. It's a project. There's not many of them around in the world like this. So we think in a jurisdiction like BC and Canada, that we should be, seeing a little bit better valuation than we are.
Right. So if I feel like being a contrarian investor, obviously historically I'd be looking at exploration companies, high leverage, high risk, high leverage environment, the safety that developers can bring, I guess, is what, as far as you're concerned.
Well, there's some developers who certainly ran into some issues. This project is a little bit different than those, a lot less earthwork, so the risk on it we feel is a lot less. But really, it's just the metrics of the project. That's what really differentiates us. How many ounces we're producing out of the gate, the extremely high grade. We're economic down to levels of well below $1,400 gold. But we expect gold to be increasing. That it's really about that production that we can expect at the cost that we can expect in the jurisdiction we are.
But talk about the risk component. So I get the money on paper. This looks fantastic, right? We read a report about it last year and said that this looks like a solid project. And I don't think anything's really changed. I mean, the cost around that's changed, but so is gold and silver price down too. Yep. But the risk mitigation for you, given your track record elsewhere, and you kind of briefly touched upon some of that. Why come back to this simplicity comment of yours? What makes it so simple in terms of your team will not struggle to get this thing built? Why?
Okay, multiple reasons. First, the earthworks component of it is small. So getting in and getting the pit started, the ore is literally right on the surface. Mm-hmm. So getting that started, it's more about getting into the pit and getting enough of the rock to build kind of the rest of the stuff out. We simplified the mill circuit. That makes both building it and operating it a lot less risky. So a lot more comfortable with that. And we made some big improvements in the metallurgy. So we went back kind of to basics and in our met testing the last kind of 8-9 months, really looked at doing things that were more normal, brought in a fresh set of eyes. And he looked at it, and we were able to make a really kind of big change in our concentrate production. Mm. So we were able to increase the gold grades by over 70%, reduce the amount of concentrate we're producing by 43%. Mm. So we're having to ship now quite a bit less concentrate. So in this feasibility study over the life of mine, we'll ship 1.5 million tons of concentrate. If we were going to do it in the old metallurgy regime, we'd be at 2.7 million tons. So we're saving a significant amount, and that's huge to the bottom line costs.
Okay, so efficiency is efficiency. Yeah. Okay, well done. Well, look, any message for us that we need to be aware of in terms of what the next 3 months holds for you? Because it's that tax loss season, right?
Yeah.
So people have got to redeploy, take their losses, and redeploy, where they see fit. What's your message to those people?
Well, there's been a lot of heavy selling. We think, there's some reasons for it that aren't connected with the project as much as it is maybe some tax loss selling, funds changing, a few things like that. We think this is a great opportunity for people to get into this now. We're focused now on just moving this ahead. Next step, working through the permitting process, getting the project financing is kind of the next big one.
We agree.
Good, Sam. Good suggestions. Thank you.